So we saw some major movement in the markets in the past few weeks, and some of you might be thinking that the bulls are back and we are taking markets to the moon. And I don't blame you, as I would also assume the same. But one must wonder, what is going on with the market and how do you play this? Are we out for real, or is this some kind of a dead cat bounce in slow motion? So I'll show you a clear picture on where the market is flowing, which sectors are continuing to struggle. I will also share sector-wide money flow as well, and if the investors are feeling bullish or bearish, and then what I'm doing. Cannot suggest to you what you should do, but I will share with what I'm doing. So let me share the screen and let me give you some breakdown of a few of the sectors and also where the money is flowing. I have divided this research into multiple parts, so stick with me and continue till the end of the video to get a big picture of what the market is doing. Sorry, I had to drink some water. Okay, so as you can see over here, we have an equity over here, which is value, growth, and blend. And this is February of 2022. This is March of 2022. Value from January of 2022 actually grew, or the money came back into the value of in February of 2022. Now, if you see the growth was negative in January of 2022. Lot of growth stocks were getting killed. And then we saw a little bit of movement where the money started to come back into the growth in February of 2022, and then we saw a huge spike, and that's why we see this rally where a lot of money came, almost $3.5 billion came into the growth in March of 2022. The blend, if you pay attention over here, actually decreased from February. That means people were investing in value. They took the money out of value and they actually put it in growth. It's not that the new money came out. So that means the institutions are still scared of going in big time, as we have seen in the previous months where institutions were pouring money into the market. They're still being scared. Another thing to note here is fixed income. If you pay attention, mortgage backed, because of the higher interest rate, has been losing money, or people have been withdrawing money in the mortgage bag all the way from November. Since November, mortgages started to lose interest, where we had negative outflows in mortgage backed securities. Inflation protected, pay attention to this. Inflation protected securities in January and February had an outflow of money, but now in March we had almost $2.3 billion inflow of money in inflation protected securities. That means people are getting a little bit more concerned about inflation as we are getting more and more numbers, or higher CPI data, and also the higher interest rate. Next, I would like to bring your attention to is what's going on with the smart beta flows. That means how the money is flowing into the markets. Now, if you pay attention over here, we have negative outflows of money from January and February in growth. And then as I told you before, we had a positive inflow of money in growth, and then we had a negative outflow of money for the value. So people are actually taking money out of the value stocks and they are going into the growth stock for the month of March. Now, if I break it down to the sector, you can see that these are the sectors that are basically still gaining momentum. Clean energy almost got $1 billion in it, and it was almost in every month, January, February, actually December. This is all the way 2021. So we are going back to the clean energy right here, and we can see from December we had an outflow of money, and then this month we had an inflow of money for December. Then after that we had fintech. If you look at fintech is still losing money, negative 36.9 right here, as compared to 165.9 that it gained in the month of February. So February was better for fintech. Where was it? I have no idea, because I haven't seen stocks like SoFi do anything in the month of February. It actually went down. But some of the stocks, especially Upstart and few others, saw that momentum up and down, but then they ended up losing all the gains they had. So fintech is still losing money. PayPal is the only one that I feel right now is going to gain the first, I would say, as soon as the money started to flow back into the fintech. And still we are seeing a negative outflow in fintech all the way. Started back in when actually? Started in July of last year. Right here is fintech. And as you can see, started July of last year. We had a negative outflow of fintech every month except February, where we gained some money back into the fintech, I think. But now we are still in negative. Now, month will end in next few days and we will find out exactly what's going on with that. But look over here, cybersecurity gained a huge deal. That's why we see Palantir, this massive run, or Palo Alto, massive run, CrowdStrike, massive run. We see because of the cybersecurity getting so much more money as compared to an outflow in January, a little bit of inflow, and then almost $1.1 billion of inflow in March. Now, if I show you this, this is where it gets really interesting. So look at this. Risk on is basically when people are investing in a more risky assets or more risky, I would say, securities. These are weeks, these are not months, okay? So this is March 4th week, March 11th week, and March 18th week. Risk on was massive in the week of 11th, where people are pouring money into the risky stocks, and that's why we saw that rally that we saw. Then in March 18th, which was last week, we saw a negative outflow of risk on and risk off. Now, long leverage, where people are feeling bullish, we don't have a data. People are still not that bullish for the long term. That means people are coming in. As soon as they hit their target, they're getting out. They're not keeping their money for the long term. But in terms of short and inverse bearish, we can see a positive inflow all the way coming from February 4th week. Right here we saw inflow in the bearish sector, and it's continuing the inflow. We had the smallest inflow in February 25th week, but this week on 318 was the lowest. But then long leverage, people are still not over here. So I feel that people, or I would say institutions, hedge funds, are still not sure what to do. But this is what I'm doing. So now no one can tell you if we are out of the water and this is it and we will see the bulls return to the market. No one can answer that. But what I can tell you is that the prices we have right now for some stocks like Microsoft, Apple, PayPal are very tempting. And I'm interested in adding them more to my portfolio and will do so in the coming days, but I'm in no rush. I might not catch the absolute bottom, but that's okay, as I'm investing for long term and I don't plan to get out of them quickly. So one of the other stock that I'm really considering adding a massive part of my capital, I recently sold Berkshire Hathaway when it hit $500,000. I made about, I would say, 70 to 80% of my money on that stock. And I have that cash sitting on the sideline, and I'm waiting for the right time to add this one particular stock, which many of you know is one of my favorite. I'm going to actually diversify this time, where I'm going to put 50% of that capital toward this one stock, and then I'm going to diversify between Nvidia and Microsoft. I know I'm very tech heavy when it comes to that, and some people will say that I'm not does not have a diversified portfolio. That means I don't have a lot of Coca-Cola, I don't have a lot of United Healthcare, or I don't have United Airlines. But I know tech well, I study tech well, and I feel more confident going in the coming months that I'm tech heavy because I feel those companies are going to do phenomenal. So in my next video, I'll share that one stock which I plan on investing almost $250,000 in the coming days as and when I see the market situation improves. I hope I provided some value, and if you like the video, then hit the like button and consider subscribing. And for more one-on-one conversation, consider joining our Patreon and Discord. Links are in the description below. And also take advantage of 4 free stock and a guaranteed new stock by signing up for Moomoo. It's a great app and I like charting features. I'm using the charting for that. I used to use Webull, I used to use TradingView, all of that, but now I'm combining more and more on Moomoo because of all the details it has, all the studies it has, and all the news features it has. A pleasure to share this. And now a quick personal experience. So I went on a business trip last week, as most of you know, and then I had 3 days of conference, and then I went 3 days to Disney, Orlando. I'm telling you, people are back. There were so many people there at Disney, so many people in lines. I never like standing in lines for more than 10 minutes. If a restaurant has a more than 10-minute wait, I usually just go to the next one because I feel like it's not worth waiting for like 40 minutes for a table for the food, unless it's like, wow, amazing restaurant that you cannot find that dish anywhere and you are there to eat that. But Disney, of course, for the kids, I was in line for like each ride for like 40 minutes, 45 minutes. I'm telling you, the experience that I had was phenomenal. I feel that we are back. The pandemic, what pandemic? It's ended. There were only few people wearing the mask. Otherwise, everybody was just happy. Everybody was just excited. Everybody was just, and so expensive. Each day is so expensive. Each meal is so expensive, and people don't mind spending money. So I feel people have a lot of money. And once we see the bulls return to the market, once we see the market situation improves, the whole sentiment improves, we can see the money flowing back. I'm definitely buying some Disney stock because I'm telling you, it was so busy that we couldn't even get in few parks, and my wife was trying to book it like 3 days in advance, 4 days in advance. We still couldn't get in some of the parks, so we had to make changes and we have to go to different parks. So that's absolutely an amazing news for places like Disney or for movie theaters or things that are opening up, because I feel that people are exhausted, they're done, they want to go out and spend the money, which is a great news. So thank you for being here and thank you for watching. Until next time, you all have a sparkling day.